Good morning, traders. It's the 25th of January. I'm Joe Neighbour from Signal Centre. I hope everybody's doing well. Just me again today. Steve back next week, so only a couple more days to put up with me until Steve is back and we can start sharing the load of going through all these charts on a daily basis. So as usual, we're going to go through the latest headlines, then talk about what's happening on the markets from a price action perspective. So plenty to get through. Let's start off with those headlines though. So Eurozone PMI data edges stronger actually yesterday. So the PMI manufacturing index improved to a 5-month high of 48.8 for January from 47.8, and that was above the consensus forecast of 48.5, while the services sector improved to a 6-month high of 50.7 from 49.8, and again above the expectations. The UK services, however, are still struggling. The UK manufacturing PMI index improved to a 4-month high of 46.7 from 45.3 in the previous month, but it's still in contraction territory. And that's the same situation in the US. The US manufacturing index edged higher to 46.8 for January from 46.2, and that was ever so slightly above the consensus forecasts that were published. So overall, the dollar continues to struggle. Mixed dollar performance yesterday against major currencies as the individual data releases dominated. The dollar index was static and only just above 7-month lows on Wednesday. Overnight, we've had some inflation data from Australia, and that suggested that consumer prices increased 1.9% for the fourth quarter, and the headline inflation rate increased sharply to 8.4% for the fourth quarter from 7.3%, and this was well above expectations of 7.6%. So the data has triggered expectations of a more hawkish Reserve Bank policy. We've got interest rate decisions today from the Bank of Canada. They will announce their latest policy today. Consensus forecasts are that there's going to be a further rate increase of 25 basis points, taking the overall rate to 4.5%. And the bank will also release its latest monetary policy report. The rate call and forward guidance will be crucial, so we'll be keeping an eye out for the press conferences later today, which start around 4:15 UK time. And as we've mentioned a couple of times already this week, the Chinese markets are shut for the Lunar New Year celebrations. So if anybody's watching today, I'm going to get into the charts in a moment. If there's any markets that you're interested in and you'd like me to cover from a technical perspective, please feel free to post them up and I will do my best to cover them to give you what hopefully is an impartial view on these markets. Obviously, when we trade markets on a regular basis, we can get emotionally attached to those. So if you want a fresh set of eyes to take a look at these markets and give you an opinion, feel free to let me know what you're looking at. Okay, let's get into the markets then. I'm going to start off with cryptocurrencies as we often do. This is the Crypto 10 index. So I mentioned this last week because I think it's quite an interesting basket of cryptocurrencies to look at. So rather than just focusing on the sort of main names, we're actually going to take a basket of 10. And an index has been created here by Pepstone, one of the big brokers. So we can see here that the Crypto 10 index was trading in a downtrend and arguably still is because we haven't taken out this high here from November. So at the moment, we're still trading in a sequence of lower highs. Now, last week, we attempted to break through these levels of resistance that we've got on the chart between 7228 to 7349. We had a little bit of a poke above. But on Saturday, posted a bit of a shooting star candle. We then backed that up on Sunday with a doji. Monday was a little bit stronger, but yesterday we saw some weakness engulfing all of the gains that we saw on Sunday, which is a little bit of concern. However, if we look at how price action is forming at the moment, it is actually bouncing from a retest of this broken trend line. So that offers some encouragement, but we do still have these bands of resistance here that are preventing prices from moving higher. So we need to keep a watch on this. I think if we can see a real clean break above these highs that we've posted in the last few sessions, then that would be really encouraging and suggest that prices may continue to move higher and that risk appetite is improving with regards to the cryptocurrencies. Let's take a look at Bitcoin on a standalone basis. As we know, last week that broke through resistance at 21555. We saw this big impulsive move higher on the Friday, but then prices have been pretty sideways and choppy, trying to consolidate in this above this newly formed support. So we may see prices pull back to test that at some stage, but ultimately it looks like we may be in the process of forming some form of bottom here on cryptocurrencies. Which is encouraging. Maybe something like this being a left shoulder, this being a head. Maybe we'll form some sort of right shoulder in the short term, and we can buy into these pullbacks. But ultimately, looking pretty robust for now. And I'd be looking to buy dips, I think, down to that 21555 level. Okay, see a couple of requests coming in. I'll be looking at Aussie CAD in a bit, but prior to that, I'm going to check out some commodities and take a look at the precious metals. Let's start off with gold. We can see here that prices are continuing to move higher on gold. Yesterday, we posted higher prices, the highest price actually that we've seen since April last year. And we are grinding higher towards this resistance level that we've got here around 1972, which is a 78.6 Fibonacci retracement level from these highs here that we posted back in March last year down to these lows that we posted in September. So that may provide some initial resistance, but at the moment still trading in this sharp upward trend. So looking pretty good on that front. Obviously, if we get a break of this trend at some point, then that may trigger a bit of a correction on gold. But that would also mean that we need to see some sort of support and a bounce in the dollar index, which we're not getting at the moment. Silver's a slightly different situation. Prices have been range bound between 24.30 to 23.11, as we can see here. We've also seen a break of the short-term uptrend here, posting this pretty nasty candle on Monday. And at the minute, it's just very choppy and very range bound. So what am I looking for here? Well, if we get a close below the lower band of this range at 23.11, then I think we can start expecting to see lower prices in the short term, maybe a pullback towards this region here around 21.45. However, if we get a break to the upside, then we do encounter a resistance level not far above, around 24.89, which is a 78.6% fib level, like we just saw on gold. And a horizontal resistance level I've got here as well. So maybe upside looking a little bit limited in the short term. I think my bias, given that we've seen the break of this short-term uptrend, maybe is for a break to the downside on silver. But I'm open-minded on that, and we'll wait and see what happens. Let's take a look at oil. So this was threatening to break out above this downtrend channel and come up against resistance at around 87.95. We've failed at that so far. Maybe finding some short-term support around 86.05. But if we can get a break above this at 87.95 on a closing basis, then we're exiting this channel and we can start looking for higher prices, potentially towards 97.96. But still a bit of work to do on this. At the moment, it's trading at the upper end of the downtrend channel. So that may be more appealing to the short sellers who will be looking for this channel to continue and for prices to continue moving lower. Let's take a look at crude. Again, threatening to try and break out. We saw a move to the upside yesterday through the upper band of the channel, but closed back within it. So not ready to break out yet, it would seem at the moment. So potential for lower prices there, given that we posted a bit of an engulfing candle yesterday. And we're slightly lower again today as well, only by 0.07% as things stand. We do have inventory data due out today at 3:30 UK time. So that could be one to watch later on. Let's take a look at natural gas. So we posted a bit of a move to the upside yesterday following this impressive hammer type candle that was formed on Monday, but we've reversed that pretty dramatically over the past 24 hours and continuing to move lower today, down by almost 4% on natural gas as things stand. So we've got this head and shoulders top that we've been speaking about for a while. The measured move of this top pattern, taking measurement from the head to the neckline projecting lower, comes in at 285. And that is very close to where we're trading at the moment, currently at 295. So we are hurtling towards that level very quickly. It isn't necessarily a support level, so I don't know if it will provide any kind of support for natural gas, but it is the measured move target and really just confirms that we've hit our objective price target on that. So I think that'll be a case of maybe taking some profits off the table if you've been following this pattern, and then maybe looking to reassess for further signs of where price may be headed next. Okay, let's take a look at FX then. We'll start off with the main markets to begin with, and if there are any further requests other than Aussie CAD, then we'll get to those. So dollar index to start with, price action in the last few days has been quite choppy and range bound. We can see some really large wicks that are forming on these candles over the last few days, and some really small bodies of these candles as well. So a lot of indecision going on here. We are at a pretty important 50% fib level, which is at 102.15. We're trading below that at the moment. That hasn't really provided any kind of meaningful support. Below that, we have a support of 101.30, which is these previous swing lows here from back in May last year. So interested to see if that provides any support at all. But given how dramatic the move lower has been in the dollar index, we've not really seen any kind of meaningful correction higher. So while we continue to consolidate and see prices be trading sort of ever so tighter ranges with small bodies on these candles, I think that maybe gives reason to believe that we could see a corrective move higher at some point. And that would kind of line up with these resistance levels that we're seeing on some of the precious metal markets as well, like gold and silver, and may indicate that we're going to see a pullback in those and maybe a rise in the value of the dollar index. But no clear signals on that just at the moment. So it's just a watch and wait for now on the US dollar. Let's take a look at euro dollar. That should be doing something similar but in reverse. And if we look at the price action over the last few days, we can see that the candles, the bodies of the candles are becoming a bit smaller. Yes, we're seeing some big wicks on these candles, but it feels as though this is maybe grinding higher now and starting to run out of a little bit of steam. We're posting levels close to a 50% Fibonacci retracement level at 109.42. So it'd be interesting to see if it has the impetus and the impulsiveness to get through that level today or over the next couple of days, but maybe looks like it's starting to roll over a little bit here. And again, that would be supportive of suggesting that the dollar index may be due a bit of a bounce. So be careful here, I think, if you're still going long of euro US dollar. Overall, still looks quite bullish, but maybe some signs that it's starting to weaken a touch. Let's take a look at cable. So we know that rallied into resistance at 124.30. We posted a swing failure here on Monday, and prices have continued to move lower. This resistance level goes back to these levels here in June. And we've seen prices stall into that level. So maybe we're going to start seeing a bit of a pullback here in the value of cable as well. Again, for this to really pick up steam, we're going to need to see some strength in the dollar index, which we're not quite getting at the moment. Let's take a look at some of these commodity currencies because they're looking pretty strong. So this is Aussie versus the US dollar. Rallied substantially in recent weeks and months. This began really back in October. And we've now actually reached a 61.8% Fibonacci retracement level of this entire down move that began in April last year, down to these lows that we posted in October. So we're into this 61.8% fib level. I've also got a kind of a level here that was unfilled really prior to this kind of breakdown in price that we saw. So typically I find that these act as resistance levels as well. We've also got this swing high that was posted in August. So I'll be keeping a close watch on this today. If we try and test that previous swing high and can't manage to close above it, and also the fact that we've got the 61.8% fib level here as well, maybe a clue that we are going to see a bit of a reversal in this. It's highly speculative at this point. I need to see more evidence of how prices are playing out there, but I am tempted to maybe trade that from the downside because we have had a pretty substantial move and we're into some very key Fibonacci levels on the daily charts. Let's take a look at New Zealand dollar. That is weakening a touch. We were trading within a bullish channel. We broke out of that, so we just take that off because it's invalid now. But we are into a resistance level here that we can see started back in August. We failed on the first attempt in December. We failed then again on the 18th of January. But in the last couple of days, we have closed above it. But if we go now by the wicks of these candles and these highest prices that we've printed, we are struggling to close above that. So maybe some sort of range could potentially form here. Arguably, you could say there's a really large bottom in place here on New Zealand dollar versus the US dollar. Maybe something like this, head and shoulders, this being the left shoulder, this being the head, and this being the right shoulder. So on that basis, it looks really quite positive from a technical perspective, but there is a pretty stiff amount of resistance here that needs to be overcome before we can get too excited about that. If it does indeed play out, then it would suggest much higher prices for New Zealand dollar versus the US dollar, and this would indicate that we're going to see a real demand for these riskier currencies linked to commodities like Aussie and New Zealand dollar currencies, and we're going to see some substantial weakness in the US dollar. So if this head and shoulders does indeed go on to complete, it would suggest that we could see maybe New Zealand dollar go up to 75.15, which percentage wise is a pretty dramatic move from where we're currently trading. We're talking about nearly 16% higher in the New Zealand dollar versus the US dollar. Okay, let's get on to these requests and let's take a look at Aussie CAD. Really strong move to the upside on this on the daily chart. So we did have a 78.6% fib level from this entire down move here, which was coming in at 93.20. It did act as resistance on a number of occasions, as we can see here, but then finally we saw a big break to the upside and prices really haven't looked back since. So now we're approaching these previous highs that were posted back in April at 95.16. So it'd be interesting to see if we get any kind of reaction at that level. If we do indeed hit this level, maybe have a little bit of a poke above it and then fail to close above it, that could indicate that maybe this move has come to an end in the short term and we could see a little bit of a pullback. Of course, simultaneously, if we get a break above this and a really strong move through it and a close above it, then we'd be looking for a pullback to test that newly formed support at 95.16 before maybe we're looking for higher prices. Let's just actually take a look and see if there's any fib levels from this larger move higher that happened in February 2021 down to these lows, and see if we've got a confluence of levels. So we've got a 61.8% fib level that we're trying to break through today. We actually haven't closed above that 61.8% fib level for some time. We did go above it back here in April, but failed to close above it. So if we can close above that today, that could be quite encouraging and maybe suggest that we're going to head higher towards this 78.6% fib level, which is at 96.95. So watching and waiting. In terms of where I'd trade that, I'd be looking for some evidence of a failure, I think, at 95.15 if you were looking to short it. If you're looking to buy it, then you want to be ideally waiting for a break above this resistance level at 95.16, a really strong break through that level, and then look to trade pullbacks towards that level for a move higher. Okay, a request for dollar rand, which I haven't looked at probably forever. So quite keen to take a look at this and see what's happening here. So no annotations on this for me to refer to. So going in a bit blind here, but that's not a problem. So let's take a look at price action here. So we can see really from these lows in June, prices have been moving higher, and we've got a succession here of higher lows and higher highs, which we've posted. Prices have pulled back a touch in recent weeks. Let's take a look and see if there's any fib levels. I'm going to go by this previous swing level here from March to these highs. See if there's any fib levels that marry up with that. So we can see a pullback to a 38.2% fib level. So it's pretty constructive, really. We did overshoot it a little bit, but I don't want to nitpick too much about that. Let's actually look at the longer term fibs as well from these lows in June. And we can see there's a 38.2% fib level here. When you get these confluence levels, when you get multiple fib levels coming up across different time frames, they can often be really good levels to target. So any pullback really to there would obviously be quite a deep one, but into there, we're into trend support and a confluence of fib levels. So that would be a really nice level to target. But that's probably a bit more longer term. Let's take a look at it from a shorter term perspective. Is there any kind of wedge formation taking shape here? If we go from these highs, we can cut through a few of these wicks on the candles. So maybe some sort of wedge formation taking shape here on US dollar, South African rand. So that is indicative that maybe we are going to see a move higher in the US dollar versus the South African rand. Obviously, we're not really seeing much or enough strength really to go by on the dollar index at the moment. But yeah, price action's kind of been correcting lower, decent bit of rand strength into some fib levels maybe. If we can get a break above these levels here, I'd probably go by that high there at 1737. Then that's likely to have confirmed some sort of ending wedge formation, and we may see higher prices on the US dollar versus the South African rand. Alternatively, if we do continue to see dollar weakness, then there is potential longer term for this to pull back towards the longer term trend support line and these confluence of fib levels, which come in at around 1597. So hopefully that was useful. Okay, have we got any more requests? A couple of bits coming through. No, hopefully that was helpful, guys. Let's take a look at indices now, shall we? Let's go and take a look at the European indices to start with. Let's take a look at DAX. Not really much going. Thank you, Sanadid, by the way, for the coins. That's very, very generous of you. Nice pullback on DAX, still holding above major support. Price action pretty muted, really. It's not really going anywhere. Really tight ranges on this. But all in all, constructive price action. Looks as though we formed a bottom, and therefore we can expect higher prices. No real change in the story with the European markets, to be totally honest. Let's take a look at the FTSE. That looks as though it's still in corrective mode, trying to pull back to these new support areas around 76.70 to 76.22. I think if we get any pullbacks to those regions and find some buying support, then we could see higher prices. Really, when it comes to indices, it's all about the US markets at the moment. It looked as though the S&P was on the verge of trying to break out yesterday through this long-term downtrend that we've got highlighted here by this blue line. We was looking for a close above 4,016, and arguably we got it, but it was not really impulsive enough to say it was a firm breakout for us to believe in. So a little bit indecisive there with the US markets, pulling back today as well. So it looks like maybe we're not going to get this breakout just yet, and we need to watch and wait. I know we've got some earnings due out today, so that may set the tone for where we're going to move on the US markets. I think we've got Tesla due out today, actually, which obviously is a well-loved and well-supported stock, although the share price hasn't been too great. In fact, I may take a look at that in a minute as well. Let's take a look at NASDAQ. So that had a pretty decent couple of days, but it hasn't yet challenged this downtrend resistance line, which has been in place since December last year. Potentially forming some sort of bottom. We've got maybe the early beginnings of a triple bottom formation, but we need to break above 12,090 before we can confirm that. And if we do, we will also take out this downtrend resistance line at the same time. So still plenty of work to do on this. Maybe this will be attracting the short sellers as we've approached this downtrend resistance line again. And therefore, if we go by the form of this market over the recent months, then selling into these downtrends is probably going to be a reasonable option from a risk reward perspective for traders to try and take advantage of. So still more work to do on these US markets. Let's take a look at Tesla, because I believe it is reporting today. Earnings. Let's have a look. Yes, Wednesday 25th. So earnings estimate is for 1.128 earnings per share. Let's take a look at the price action here. So we've seen a decent move off the low, but we can't ignore the fact that this is trading in a pretty nasty downtrend. Completing a large top pattern back here and then breaking down. So decent move off the lows. Let's take a look and see if there's any fib levels here from this high that we posted in September down to these lows. So the 38.2 is all the way up here. So that shows you how drastic that move was to the downside. Pretty nasty indeed. So yeah, we've got earnings today. Maybe this is a move higher in anticipation of some good earnings. It's got kind of a cultish type following on Tesla, so that can skew the share price and how it moves and how it plays. But looking at this from the pure technical perspective, decent move off of the lows, no real bottoming formations that have taken any time to develop, but we did see this massive reversal candle here on the 6th of January. But no real, kind of base pattern to speak of, really. I mean, maybe you could find one if you looked at a smaller time frame, but this is into a downtrend resistance now. So it'd be interesting to see today what happens. Earnings will be out after hours in the US. So we'll revisit that tomorrow at some point to have a look at how it played out following those results. Okay, let's take a look at the gun to the head challenge now. So this is where I pick a trade idea live on the video. As if I had a gun to my head, what would I trade right now? Each of the ideas that we come up with must have stops and targets. They're all placed at market, and they must have risk reward ratios that are better than 2 to 1. We will expire these trade ideas or close them out at 9 p.m. UK time, or when the stops or the targets are hit. A new change for the beginning of 2023 is that we put some cash into an Awanda trading account that we're trading via TradingView. To see how we got on with these ideas. So we've been doing this for a few years now, and before that, we're trading it on a simulated basis, and the performance was pretty good indeed, sort of over 200% up in that time period. But would you believe it? As soon as you go live on these things, you don't see the same sort of results. But I'm confident that things will improve. We're risking 1% of trading capital on all of these ideas that we come up with, and we can see that from a starting point of 2,000, we're actually down to 1,935 as it stands. But because we're looking for generally quite big wins on these trade ideas, we're only really 1 or 2 wins away from being back to profitability and going on a decent run. So we tend to find that we go through phases where we can't pick a winner for love nor money. Then we go on these really hot streaks and are really in tune with these markets and seem to do quite well. So I've got to find a trade idea now. Was maybe a bit more attracted to some of these currencies that I was talking about earlier, because there was into some major resistance levels. So I think the one that really stood out for me maybe was Aussie US dollar, because it was into a major 61.8% Fibonacci retracement level on the daily chart. Having completed a decent inverse head and shoulders, we smashed into the target of that measured move, and prices have continued to move higher. So from these highs that we posted in April last year down to these lows, we've got a 61.8% fib level, which comes in at these levels here, which is at 1790. So let's have a look at the intraday and see how things are shaping up. So on the hourly, arguably we've just formed a bearish engulfing candle into that resistance level. Long way to go in the session, and obviously we're still digesting the inflation numbers that came out overnight from Australia, which has seen this continue to move higher. It does feel really speculative doing that at the moment. I mean, if you're doing it based on the daily time frame, then maybe you could get away with it because you typically have a larger stop. But I haven't got that luxury with the intraday trades, because I want to try and get in and out today with a good risk reward profile on these trades. So maybe I'll take a look at Euro sterling. This was quite interesting. I've actually got a position on already with this, but if we look at the daily chart here, we can see prices have been range bound for a period of time. We rallied into the upper end of this range, then we broke down with a fairly impulsive move lower, and we've actually posted a retest at this level. So this is my daily setup for this trade. Actually, we're selling at 88.46 with a stop loss above those highs. Decent risk reward ratio from a daily perspective, but I don't envisage this playing out in one day. So let me zoom into the daily, the intraday, and see how we're shaping up there. So the resistance level that I was looking at was 88.46. So let's get that drawn on here. 88.46. It's easier just to do it this way rather than hover over 88.46. So that was the level on the daily, and we can see that it's done a pretty good job on these intraday candles as well. Posted a bearish outside candle over the past hour. So let's get a trade on here, shall we? Take advantage of that. Selling at current levels, go with a stop loss of around 23 ticks and looking for a pullback into these levels around here. So maybe there's a little bit of a bottom here. We can see prices acted as resistance here, then as support on the reverse side. So maybe they'll do the same thing again. So that gives me a risk reward ratio of around 2.5. I'm going to have to switch the symbol. Let's get this drawn on again. And let's sell at the current price with a stop loss there and a target there, which is 2.3. Take profit level is going to be 87.78, and my stop loss level is going to be 88.57. 2.67 risk reward ratio. Let's risk 1% of capital on that. 2.61 as a risk reward. Bang, let's get that on. Okay, so we're short of euro sterling. Okay, let's just go back to a couple of requests actually we've just had in for CAD yen and crude oil. We have gone through crude oil, but I can maybe go through that again. That's not a problem. Let's take a look at the daily first of all of CAD yen. So we've been talking about this on a few occasions now for the last few weeks. So just to reiterate my view here, big top pattern here formed on CAD yen. Prices moved lower. We saw a consolidation here, then a break to the downside. And if we look at price action over recent weeks, we can see that we are still trading in a sequence of lower highs and lower lows. So this is not ideal, bit wonky, bit all over the place, but kind of just highlights what's going on here. We are seeing lower highs and lower lows here. So the bias is still for lower levels with this. Selling into this kind of region here around 98.30, I think would be ideal from a daily time frame perspective. But if you wanted to get involved in a more shorter term period, then we've got the daily bias here. We believe that prices are going to be heading lower. If we take a look at today's candle so far, we can see we've challenged these previous highs, but then reversed that quite dramatically already. If we take a look at the intraday setup, we can see that we are maybe starting to roll over a bit. Of resistance has formed there, as we'd highlighted on the daily. And we're starting to roll over a bit. So maybe if you did want to take a trade there, you've got the bias from the daily chart, and maybe we can start looking for lower prices here. And I think maybe to be on the safe side, you might want to put a stop loss above this high from back here in January. And then if you wanted to target a move down, maybe to new lows, because we are trading in a sequence of lower highs and lower lows, then you could look for something down there. I always prefer to target previous or retest of previous levels. So from that perspective, looking at a risk reward ratio around about 2.9 for maybe an intraday sell on CAD yen. One other point to mention there is the 20-day periodic volume. So it tells you where price is traded most throughout the 20 days. And we can see that the red line here is the volume point of control. So this can typically act as a bit of a magnet for price as well. But if you're going to target that level, then the risk reward maybe isn't as attractive, unless, of course, you go a bit more aggressive with your stop loss and have it above these highs here, at which point you can make the risk reward somewhere around 3-1. Okay, let's take a look at crude oil again, just to further reiterate the views here. So trading in a downtrend channel, as we know, trying to break out through these resistance levels here and struggling for the time being. And as I mentioned earlier, I think I'd like to see now a breakthrough 83.66, which will also simultaneously break through this downtrend channel at the same time. And if we can do that, then I think we may be in for a bit more of a corrective move higher on crude oil. Looks as though maybe we're trying to form some sort of rounded bottom here, but need to see more evidence of an attempt at a push higher and a bit of a cleaner breakout through some of these levels before I get too excited. Okay, another request on Aussie yen. Let's take a look at that. So I've kind of been blasted out of the water on this, to be honest. I was looking at shorting it because we've got a really impressive looking head and shoulders top pattern that had formed on the daily charts. We saw a decent move lower following the break of that. Then we saw multiple retests around the neckline, but in the last two sessions and today, in fact, in particular, we're breaking through resistance at 91.82, which had done a pretty good job at capping prices previously, and we're running away to the upside. Next level of resistance I've got is at 92.91. Sometimes you can get overshoots on these retests of necklines of head and shoulders. We can also see from the head down to those lows that we posted in December that we've actually tagged a 50% Fibonacci retracement level there as well. So I'm not ready to totally give up on that as a short trade, but it's certainly given me the runaround at the minute, and I need to see a bit more evidence of a reversal. I think what I maybe be looking for on this is this 50% fib level and this 92.92 level that I've highlighted as resistance to these previous lows in here. I'd look maybe for some sort of reversal on an intraday time frame that was encouraging, but not really getting that at the minute. Maybe a little bit of a pullback there, but the volume or where most of the price has taken place is actually quite high now on the intraday charts, which suggests this is maybe going to act as a support level on a retest. So I'd be very cautious about trying to sell Aussie yen at the moment. But looking from a buy perspective, then maybe you could argue it's broken out. And if we do get a pullback to that 91.80 level, then maybe we can start seeing higher prices. But maybe I need to look at this with fresh eyes and clear off these drawings and forget about this head and shoulders top pattern. But yeah, I'll maybe look at that throughout throughout the day and revise my view on that later. Okay, let's move this on then to the day ahead and what we've got on the economic calendar today. So we've got a few bits out. We've got German IFO index, which is due out in 25 minutes. Later today, we've got central bank policy from the Bank of Canada. The expectation is for an interest rate rise of 25 basis points, taking the headline rate to 4.5%. Then at 3:30, we've got the US EIA crude inventory data. So for Gary, looking at oil, you may want to consider that that is due out today at 3:30 UK time, because that could have a pretty significant impact. Obviously, if it shows that we've got less inventory and demand is starting to improve, then we may start to see prices continue to move higher and potentially break through that bearish channel. After that, we've got the press conference following on from the Bank of Canada policy decision. So this will be interesting to see what's happening with forward guidance, and that will be crucial for how Canadian dollar plays out today. So if anybody's got any Canadian dollar exposure, do be careful of that. And then tomorrow, we've got the US GDP reading, the first quarter GDP reading. So that could potentially be quite market moving. And we'll do a bit more of a review on that tomorrow. Okay, thank you everybody for your participation and asking me to go through those markets that you're looking at. It's always a pleasure to look at these and give you an opinion. Hopefully it's useful and provided some colour on these markets for you. I'll be back tomorrow morning, and until then, everybody have a fantastic